Hi everyone, it's Rakas, live from Engie New Ventures office again, joining you for another discussion, this time with Nigel. Hi Nigel.
Hey, how you doing, Ruckus? Nice to
I'm
have
good, I'm good.
nice to meet you.
Nice to meet you. Amazing to have you here in this another session with Energy Tech Network. Let's talk energy. So Nigel is from Engie New Ventures, a corporate venture arm CVC fund focusing on energy. It's great to have Nigel here to chat today about fund, his career, and also about his perspective on the market. So Nigel, I want to kick off with a short introduction. Maybe I always ask people, how they found themselves in the clean tech sector, and specifically in the current position that you're holding in Engie New Ventures as an investor. Could you elaborate a bit more about your career and how you ended up being as an investor in this quite exciting space?
Sure, thanks. Thanks very much. So I guess I started on the dark side, to be honest. As in, I was in offshore oil and gas for many years, and that the early part of my career I spent in Africa and Brazil, and then I understood that I knew a lot about very little. So I decided to broaden my horizons and to go and do an MBA. And after which, then I got what would you call it, a corporate job in corporate strategy in Engie, and from that managed to sidestep into Engie New Ventures as an investment director, where I am today. So, sort of in a nutshell, I've come a full circle, really, to be honest, and find myself investing in clean tech companies throughout Europe and indeed the world.
Mm. So quite what you mentioned, coming from a dark side. So how do you find this whole transition? I think timing being one very crucial element to this transition, especially now, given clean tech was kind of predominant in 2000, clean tech 1.0, so people refer to. At the time you were in oil and gas sector. How did you find yourself when you started join Engie in 2015 and really were on the back of this wave 2.0, and how are you finding it now compared to I think the old days of oil?
Yeah,
Maybe
so
not completely disregarding it that it's it's already the past, I think, but still I think the timing is better positioned for renewables and in general. I
So
would.
I think both industries, if I take oil and clean tech, have undergone transformations, certainly during since my career started. If I think that one of the things you have to remember is the concept of equilibrium, and things are on the way up, and things are on the way down, things are on the way in, and things are on the way out. Nothing's ever standing still, and that's the glorious world of innovation, according to Schumpeter, that
Mm,
indeed we invest and live on a daily basis. So to cut a long story short, clean tech has been gradually gathering momentum. I mean, even if you go back 60s, 70s, 80s, and whatnot, back to the noughties, and then really gathering pace since 2010, 2012, with the support of regulation, and gradually, solar, onshore wind, now offshore wind, gathering pace. And then you have the advent of technology, especially into the utility industries, which is just becoming stronger and stronger and stronger, and gathering more and more momentum. So
mm,
I think maybe a point as you mentioned, the question of timing. If you look at the crisis that we're in at the moment, and you compare it, say, to the last crisis and the crisis before that, one of the things that you might have found was that in the good times, everyone's thinking about clean tech, climate change, energy transition. And as soon as the crisis comes, it indeed takes a back foot or a back seat. But now, is it different this time? My belief is yes, because
yeah.
climate change or energy transition has got its own momentum, and its own momentum to push forward. It's got its own credibility and its own legitimacy and its own support from both regulation, private industry, public industry, et cetera, et cetera. So if you look at the ESG goals, if you look at the companies that are getting behind that, if you look at the investment that's going into it, and if you look at the popular support or the momentum that energy transition has, it's an unstoppable force that is certainly not going to be put back in the box. So I think for this, the question of timing is important. Just to draw the parallel, 10, 12 years ago, would the focus on energy transition have survived? I think the question is debatable. But today, it's certainly the case that energy transition will survive, if not be speeded up, because of the crisis. As in, it has its own legitimacy, which I think is an important point to note.
Yeah, absolutely. I totally support your point, and I think this is going to be probably an accelerated trend that will find itself another probably 5 to 10 years. So you joined Engie in a corporate strategy role and then moved into Engie New Ventures. Could you tell more about Engie New Ventures as a fund, and more about the strategy, as well as more your broader how it fits in within the or broader Engie organization?
Sure. So maybe I reorder the question slightly and give you the
Mm-hmm.
strategy of Engie and how Engie New
Mm-hmm.
Ventures fits into that. So back in 2016, Engie did a pivot as regard its strategy, and indeed it really embraced the energy transition. And that's the question of putting actions into words. And so it sold off its worldwide coal assets. So that transformation, I think, took 2 or 3 years, and it rotated. I think it was 14 or 15 billion euros of assets for reinvestment into cleaner, greener energy transition assets. So that's quite a transformation under the then CEO Isabelle Cocher. And Engie New Ventures fits into that, in that you realize that climate change is the driver, but technology is indeed the catalyst. So what
Yeah.
you have is the co-evolution of technologies coalescing together and reaching maturity together to be able to create the new solutions demanded by the customer. And that's important. You have to remember that you're selling a solution to people, and you have to have their needs first and foremost in your mind. What do they want? Who they are? What's everyone else offering? And you have to be on top of those technologies to be able to offer those types of solutions to your customer. So what we realized was that the integration of digital into our industries, which are broadly power, gas, and energy services, was happening, and we could either sit in the sidelines, or we could get into the game and play. So that's really the kind of the raison d'être, so to speak, of Engie New Ventures and why it was created. One of the things about the innovation ecosystem per se is that you have to put your chips on the table and play. You can't just stand back on the sidelines. It's very much you have to be in it. So you have a few investments, you create a fund, you make the contacts with the other investors, and indeed the companies in this ecosystem. And then once you have the relationships, then you try and build businesses with the investments that you have. And I think that's a very important point, is that you can be a passive investor or an active investor. We're a corporate venture capital fund, so we're very much about promoting the activities of our companies, and indeed giving them the opportunities in NGBUs, in NG businesses with NG customers, to be able to get first use cases and get access to the market. So that was really the reason behind the creation of Engie New Ventures.
And sort of maybe a couple of words about Engie as an organization. What's your mostly geography focus for people maybe they're not necessarily that familiar with the group?
Sure. So Engie is a European-based or French-based utility company with three main focus areas, which is power, gas, energy services. Of course, it's one of those worldwide industrials present in 50 different countries. It has power generation, it has gas transmission and distribution, it has transportation, and then a lot of facility management in terms of the energy services. So very much, and also has its energy consultancy then as well, its energy trading. So really, it's a conglomerate of different energy activities that's worldwide.
And so kind of drill down more into the strategy of Engie New Ventures. So how big is the total dedicated capital that you're currently investing on, and maybe more broadly on the sort of strategy of the fund? So like what geographies where the fund other people that are in the fund working on investments are located, and also what usually the typical tickets and stages that you invest?
Sure. So, um, firstly, a little bit about the fund. So, Engie is a 180 million fund. Its average ticket size is about 3 to 5 million. It does a range between about 2 and 10, and we predominantly focus on Series A, B, C. But that's the stereotype. We can do earlier, we can do later. We're very much
Mm-hmm.
flexible as regards what we can do. It's and that really brings to the point about why we do what we do. So
Mm-hmm.
maybe just about our investment philosophy. Um, Essentially, we're creating options for Engie. So you can see that a market is coming down the road. You can see that a couple of startups are active in this particular market and offering a solution. And essentially, we want to create an option for ourselves, and we want to learn about this new market or this new technology. We understand that all the clever people don't work for Engie, and that there's lots of innovation going out there outside of Engie that we need to be a part of. So this is the ticket essentially to be able to be a part of that. We try to work with the CEOs to give them opportunities and to give them first use cases and reference cases. And I think this is an important point to mention. We're not an investment team sitting in a dark room somewhere doing deals, on our own. We're very much at the service of NGBUs. For example, when we do a file, we need a BU sponsor. And the reason being we need a BU sponsor is that we need someone to do business with these, or interested to do business with the startups that we invest in. And I think this leads to another point, which is good. Startups are incredibly creative. They've got a very driven management team. They've got this wonderful flexibility to be able to pivot depending on what the customer and the market wants. One of the things perhaps that is difficult for them occasionally is access to the customer, because
Yep.
there's an incumbent like me already there.
Yep.
So really, my value prop to startups is not cash. Any good idea that has no shortage of funds. What it is access to the customer. If you come to a customer under the umbrella of Engie or as part of an Engie solution, the credibility that gives to your customer is phenomenal. If you can get your start, if I'm to use that expression, with Engie, you can use that reference case to then go and grow your business anywhere you want. It's also a good strategy if you want to enter a country or a geography. Engie has many offices, as I said, in 50 different countries. You go with someone like Engie to France or wherever, indeed to the UK, to Germany. It's just so much easier than going on your own. It's like a friendly face to introduce you. So that's really our value prop to the startups. You also have, in addition to access to markets, in addition to capital, you also have the access to expertise. Engie is fully stocked with engineers, research and development departments, research budgets, so you can really develop your solution depending on what's required by the market. And in return, we create an option for ourselves. And indeed, we get early access to innovation.
Mm.
So that's maybe a little bit about who we are and what we do.
And from like a fund objective perspective, is it? I hear a lot that there's probably fully integrated within your organization of Engie, right? Would you consider that you're more strategic as a fund oriented, or it's also financial that is important as part of it element?
So it's an important point, and it comes under the box of governance. So there's a balance to be found between strategic and financial. So firstly, we all have a CFO, and indeed he or she demands a financially healthy portfolio. So not being financially healthy just doesn't fly. However, the strategic angle, we can see a much larger upside for us than the financial angle. For example,
Yep.
if we're investing 2, 3, 4, 5 million and we do 2, 3x, okay, it's great, but it's not going to change the world for us. However, on the strategic side, if this particular solution can give us access to tens or hundreds of millions of euros of business, I mean, that's a payback that's not in the ones and twos millions. That's in the tens, hundreds of millions,
Yeah.
and indeed, it can create that type of value for a BU that's incredible. So that leverage effect for us, that's what we mean by the strategic angle, and that's quite a positive thing for us. Maybe just on the governance point, and that's maybe our focus on the strategic versus financial. We would say we're strategic, but maybe just to follow up on that one, we would say we're strategic investors, and everyone says that comes at the expense of being a financial investor. In fact, no, we have maybe a more difficult hurdle to overcome as regards an investment, in as much as the investment can't just satisfy a financial hurdle, it also has to satisfy a strategic one. And the two aren't mutually exclusive, they can go together. As regards the governance of the fund, because I think this is an important one. We're a separate entity from Engie, so we're a 100% owned entity of Engie. Think of us as a fund with one LP. But what this means is, and this is important from an industrial point of view, is the allocation of capital. If you're within Engie, the allocation of capital, it has its own process. But because you're a separate entity, the separate entity has its own board of directors and its own investment committee that meets monthly. So the point is that they're quite flexible. Firstly, the composition of the investment committee, you have your top management support, and you have the same bunch of people sitting around the table deciding the ideas, the same core group with the rotating cast of characters depending on the file that's present. What this means is that the group of people are firstly aware of what the others are doing, and secondly, they're used to making the types of investment decisions that a startup needs. A startup, an investment in a startup is Series A, Series B. The probability of failure is still quite high. There's a lot of hope invested there, if I can put it that way. It's not the sure thing of a regulated utility, for example. So the ease or freedom of the ability to make these decisions is important, and for me, it's important that it's separated from the main body of the industrial. And by having your own board of directors, your separate legal entity, your dedicated investment committee, you achieve that, and also it's much quicker to make a decision. As I said, these guys meet on a monthly basis. We can meet more often if required, and that's very important when you're dealing with startups who are agile and need quick feedback.
And given that you guys are based in quite different ecosystems, Israel, Paris, Mexico, you mentioned US as well. Is that fitting still under one umbrella? So you have one single investment committee, and then all these teams are just kind of helping you to source the deal flow, and decision is kind of made still in the headquarters, or there's more autonomy under that belt?
So the fund sits centrally. And that means that you create one portfolio and you take advantage of the portfolio effect, so to speak. If you have lots of little innovation funds operating all over the world, firstly, they're very small and they're not particularly diversified. So we centralize the innovation activity and decentralize then the scouting activity, so to speak. So you can have a global portfolio of people and companies all centralized under one portfolio, if that makes sense.
Yeah, absolutely. So going a bit more about how you look at investments, I think this question is more with regards to you personally, as well as more broadly to the fund sense. What do you guys firstly mostly look when to find in a company, to consider for investment? What specific traits, targets specific Nigel look for in a company, and then what it has to click? And you mentioned one from Engie perspective, that it has to be vouched by a BU, that there's a fit strategically to that. Anything you want to specifically mention from your personal side, what you look in?
So maybe I'll answer that generally and then specifically. So firstly, for Engie or Engie New Ventures, as it's at the service of the BU, it has to be within the innovation strategy of Engie. Okay, so we have certain areas that we would look at and certain areas that that are not a priority for us. So that's the first thing, is to find company and then strategy and put it in a box, essentially. And then from a personal perspective, we look at the three things that I guess anybody would look at: team, product, and market. And roughly for the product, we're a CVC, so we generally take the companies that are at the later stage. They have done their R&D, so their TRL is 8 or 9, and they've essentially they're ready to scale, and they need access to the market. As I said previously, that's our main value prop. Some of the financial guys might come in a bit earlier, take a bit more risk, but us, because of our interest and also what we can provide, we feel we're better at the more mature companies. So that's roughly Series A, Series B, and whatnot, that really need access to the market. Then, of course, there's the team. When you're investing so early, I mean, you're putting such an amount of trust in the team to be able to drive the idea forward. So it's about taking a view: can this CEO, can this team get this idea over the line? Because you can have great idea, poor execution, great idea, or vice versa. And it's let me get that expression right. It's the good idea and poor management, or what's it? Poor idea, good management. You get the point.
Yeah.
And it's the B idea with the A management that's always going to win, because you need those types of characters to be able to make the right decisions and drive forward the idea. And then it's a question of market, and the rough question of the market is size. Okay, so is it getting bigger? Is it getting smaller? And I think it's important to take a view on that. Is this a coming market, or is this a past market? And what will it be like in the future? So it's about the startup credibly convincing us on these three aspects. Maybe that's a personal philosophy, but that's how we tend to approach it.
Any specific companies that you would like to emphasize that fitted that criteria, ended up being portfolio, and or any maybe technologies that you're specifically very interested in that are doing very well in your portfolio that you would like to mention?
Yeah, so this is a tricky question, because it's the question of timing, right?
Absolutely.
And I think maybe as a general point, as a venture investor, the bad ones always fail first, right? And you get hammered.
Yeah.
and the good ones are generally slow cookers, and they take
even though we know the odds against us, it's still hard, right?
I know, right? So you have the question of timing. So if you have a 10-year fund, you can bet that you're going to have some failures early on, and the really good ones are going to take longer to mature. But generally, you get hung first, right? For the early failures. So the question is timing. You can have invested, but you just might be that 2-3 years early before this market takes off. And then, for whatever reason, the market takes off. It can be COVID, it can be whatever, a change in regulation. And suddenly you go from being a pariah to a hero, almost overnight. So the concept that I'm quite excited about, and that are coming. So I would say that the smart grid, I quite like this from a number of different angles, from getting distributed energy resources on board, and the different solutions that you can create with these DERMS solutions. For me, that's probably one that has been cooking away since 2014, 15, 16 in our portfolio, and has really only gotten legs now in 2019 and 20, and that'll only accelerate going forward. So we have a couple of investments. One is in Kiwi, one is in Opus One. We have Second Life Batteries and Connected Energy. We have an investment, but it's not, say, in our portfolio, Tico. We have another one, EPS, the Italian one. And for me, this is an example of us melding together a bunch of different investments that are both majority and minority to create a solution that we can offer to market. So for me, I'd be quite excited about that. I call it smart grid. We can call it digital grid, but it's a broad kind of a DERM solution that we're coming at in many different ways. That for me, I think it's going to be quite exciting quite soon. Yeah.
I know all the companies that you mentioned. So yeah, definitely an interesting thing, and it's sort of bundle into the sometimes it seems when you look from a side way that companies somewhat are competing in a way, but the reality is when you drill down to these companies, they're doing completely different things, but they're complementary more than so. And obviously having
Yeah.
someone like you guys facing the customer that helps them to
So
scale it
this
up
is
as
an
well.
interesting point about the question of value chain, right? So
Mm,
where on the value chain? So firstly, what is the value chain, depending on any different industrial vertical,
yeah.
and where do you want to play, and what type of skill sets or technologies do you need to have internal versus not, or versus external? And
Mm,
this is a key starting ground for us when we're looking at innovative investments or areas that we're going to invest in. Is what is the value chain? What do we do at the moment? What do we not do? And where do we think we need to invest? And that's an exercise that's ongoing every month in different verticals.
mm,
Maybe just one example of a company that is being impacted by COVID in a positive way, because I thought this is quite interesting in terms of the acceleration of the acceptance of tech, and it's
yeah.
maybe an industrial point more than a venture point, but I'll tell it anyway. Um, Industries can be incredibly conservative as regards taking on board or embracing new technologies, and embracing innovation because of the risk and the downside and whatnot. And one of the things you find is the embracing of technology. And one of the investments that we made was in a company called Vintelligence from the UK, and they're basically doing computer vision. And essentially, the value prop of this customer, which is voice and video to text. Maybe I give an example. You go to check a fire extinguisher in a building to see that
Mm-hmm.
it's maintained and whatnot, and you see that it's not being maintained. You take out your phone, you take a video, and you do the report using your voice. So you have the video and voice, and you do the voice following a storyboard. Click, it goes up to the cloud, and then the AI behind it automatically generates a report and says, generates a report to say, okay, fire extinguisher in room A, floor B, can you replace it? It's out of date, et cetera, et cetera.
Okay.
But you can imagine that the alternative to that is the guy has a piece of paper, he has to download it from SharePoint somewhere, get into his car, fill it out, blah blah blah, and give it to whoever to upload and to create this report manually. So the acceptance by the industry of this type of technology, voice and video to text, has gone from maybe we'll think about it to just right out to off the charts, because of COVID, because everybody needed the remote working and whatnot during this time. So that's maybe an example of a technology being accepted. It's the acceptance of technology being speeded up rather than just taking the normal let's say integration time, which can be much slower.
Mm. Okay. Yeah. Great example. I think it's a combination of different technologies that also go in place to make that possible. You mentioned, voice as one option, which I think is underused in most instances for
Yeah,
these type of scenarios.
totally agree with you on that one. So it's basically digital in a nutshell. It's
Yeah.
the IoT, the AI, and the use of mobile devices to capture accurate data.
Hmm. So I think, energy has not probably been as so crowded space back in 2015 when Engie New Ventures launched, and since then, fast forward, the kind of horizon completely changed. I think quite a lot of generalist funds are also looking in the space. They understand the size of the market and opportunity of this transition. How does Engie differentiate themselves as a CVC from different corporates as well as other investors in the space, whether that's pure generalists, whether that's focus centric funds, and just other, what they call it, tourists in the market that are entering to invest.
Yeah, I've heard that expression, the venture tourist. All right. So I think we've touched on this previously, but the
Yeah.
USP, so to speak, is our access to the customers and access to the market, and also our global presence. So, we have a couple of investments in the US and Canada, and our value prop is indeed to bring them to Europe. We also have plenty of industrial partners that we've been doing power projects with for decades. We can easily do a partnership with them with the intent to bring a partner to a new geography or a new location, or introduce them to a new partner, a new customer. So, if the kind of conversations that we have as a corporate with different startups, the startups like, okay, I look at my cap table, I have maybe some early financial investors. Okay, I've now scaled up my TRL, I've done my R&D. Damn, I really need to access the market. Okay, let's look around and see if we can get an industrial on board. Because his value prop is exactly that, is access to the market and to proof the concept, to be able to get some use cases and reference cases to be able to go somewhere else. So our value prop is very much that. It's certainly not finance, even though we provide that. It's access to the customer. That's the key point.
Mm. And before you go and partner up with the company, meaning you invest in them and obviously open the kind of gate to your customers and an ability to pilot, do you have other pre-steps how you validate these companies within your B units? Maybe just kind of walk through a typical way that you would kind of validate this company, or that is solely part of due diligence that you would engage with the company?
So in fact, it's a good question. It's very much bespoke depending on the deal in question. So we've had all sorts. So we've had companies where we've been doing pilots with already without investment, and then we've subsequently invested, for example. We've had companies where we haven't done any pilots with. We just really like the idea. We've been looking at this space. We had done a competitive analysis, and we narrowed it down to 4 or 5 and gone after an investment in one in particular. So that would be, the pilot would come after effectively. For all investments, we of course do our technical due diligence, and essentially, and just be really blunt about this, it sums up for us, just to sum it up, does it do what it says on the tin? There's a lot of PowerPoints out there that can be very vague. So we take a look under the hood during the tech due diligence, and we see, we take a view on whether this thing can actually do what it says on the tin. And that's very, very, very important to us, that we validated the technology in advance. But we don't necessarily have to have the commercial relationship in advance. However, if that is not the case, it's very important that the commercial relationship happens at the time of the investment. Maybe I'll give an example on this to put it into practice. Often, but not all the time, we can have a precondition on the term sheet that before we invest, we need a commercial agreement signed between the startup and a BU of Engie. And the reason for this is that the BUs and the startup, the actual guys doing the commercial end of the transaction, need to sit down in the room and say, okay, my value prop to you is this, and my value prop to you is that. And they need to have that conversation. And it has to happen at the time of investment. If it happens 6 months or a year later, it's very difficult to get the momentum established, because the new investment is not new and shiny anymore. It's a year old, and everybody's moved on. So we find that in the process, that's super important that these conversations happen, so that both parties understand what they're getting into, because it's a long-term relationship. And if that doesn't happen, we've found it to create problems in the past.
And while you investing, a couple of things I think for people that maybe are looking from a co-investment perspective, are you investing with other competitors of yours? So let's say if I'm a utility, is that a go or no go?
So all the time, in fact. Again, every deal is unique, but if you have a platform investment, the more competitors that are involved in that, the better, because it validates the market, and it means that we don't have control over the platform and that it's independent. So of course we would look to invest with our competitors there in those types of deals. If we're sharing or competing for a market, for example, I just take France, we probably wouldn't invest with a competitor because it just wouldn't be a good idea. It would create some tension at the board. But we're 100% flexible depending on the deal in question. But just as a kind of a generic point, if it's a platform-esque type business, then indeed we generally look to invest with competitors, just because it creates validation for the platform, and also provides more traction for the more use cases, reference cases, etc., for the platform itself, and the question of control.
And you lead rounds, or you're more usually trying to be a follow-on investor with someone leading the round, or it could happen depending again on the deal? I know this is very prescriptive questions to a situation, but
Not at
altogether,
all. So
what's your kind of take on it?
Both, to be honest, we're very flexible. Again, we have no problem to set the price. We've been doing this for quite a while now. We've built up a good deal of expertise as regards our valuations. So we've no problem to lead, and we've no problem to bring in investors per se of our choosing, and then equally the choosing of the market, or the choosing of the startup. And equally, depending on the deal that we're happy to be in for a specific reason, we'll happily follow, and someone else can set the price. So for me, there's a good deal of flexibility there available to the investment directors to decide how they want to structure a deal. So it's very much down to the situational aspect of it.
I see. And sort of going out into sort of third phase of questions, more about general market, and I think reflecting on your, Nigel, perspective here, what do you think are three trends that are going to be mostly important in the next couple of years in this sustainable energy transition, or what you yourself personally looking, or as a fund looking at? And I know you mentioned already the thesis that you as Engie look at, but what gets you excited in general, maybe in a couple of years' time, not necessarily now?
Yeah, it's an interesting one. So one of the things certainly is the aspect of the smart grid. So that's the DERMS aspect. That might not be a question for the future. It might be a question for now, to be honest. But that's certainly something I like. Green gas is another one. I think that one can be a little bit neglected, and indeed it's maybe a little bit far off into the future. But the replacement of grey gas with green gas, and the different ways to create green gas, that's currently heavily supported by regulation. But as that goes on in the future, that should become much more mainstream. Another thing then is energy efficiency in buildings, and the digitization required to be able to bring those solutions to market. So energy efficiency in buildings is a huge thing. Buildings can be fantastically inefficient at how they were built many years ago as regards their energy consumption, their usage and retention. And that's something that we're quite excited about devoting quite a lot of time to at the moment.
Okay, very interesting. And from sort of these trends, would you think, where does, let's say, something like hydrogen or storage sit? I know it's part somewhat from DERMS depending on the use case, but I've seen some interesting things going on from like a hydrogen perspective, as well as storage applications from Germany and France and Europe going big in general on it. What's your kind of take on that?
So hydrogen is one of those really broad things. There's many different parts to it. For us, one of the focuses for us is on the industrial generation of hydrogen on site. Currently, hydrogen, I think, is transported to site, and it can be very, very expensive. So there's a couple of startups out there that are doing a lot of generation on site, which we're quite interested in. I think we've done one investment early this year in Q1 in a Spanish company that promotes that. Hydrogen then for transport, from the last time I looked at that was a little bit further out. That was maybe a 2035, 2040 technology. So I think it's a question for hydrogen. The last time I checked in on it was, you have the existing applications that indeed are ripe for disruption, and you have the more futuristic applications of hydrogen that, from what I saw, was a long way out. As I said, 2035-ish. If I'm contradicting anybody there, I apologize. But that was my take on it. As regards the storage part of it, we looked at one company, Electrokia, and that had a novel take on it. So that would take renewable electricity. It would combine that then to create hydrogen, and it would then mix that with waste CO2 to create green gas, CH4.
Okay.
And for me, that was for energy storage. That's long-term energy storage instead of wasting the renewable power because it wasn't required. You could transform it into a different gas and use it at a later date. And also, you could use it in the existing pipelines that are laid throughout Europe, which is a huge infrastructure. Whereas hydrogen,
Mm.
you can only mix a very, very, very low percentage of hydrogen into the existing gas, or to existing gas to use the existing gas infrastructure.
Cones is something that is even more relevant today, COVID situation.
Mm,
What do you think? There's been a very interesting things happening. One a lifetime pandemic at the same time having this massive supply and demand shock in oil prices. Uh, Again, at the very beginning of the conversation, you touched upon you were indeed starting your career in the oil and gas sector. What do you think this shift in, let's say, oil prices to negative, and just in general to the industry, oil and gas industry, will result going forward for the sustainable energy transition? Do you think it accelerates it? It maybe puts a stop, not a stop, but maybe slow down to it? What do you think is going to be the effect of all this?
yeah. So great question and interesting food for thought there. Maybe previously, if you saw the price of oil reducing so much,
Mm,
the energy transition would have taken a backseat. But as I said earlier on, for me, the independent momentum that energy transition technologies and growth has um, are certainly they have an independence that is not linked anymore to the price of oil. So for me, whether the price of oil is going up or going down, the impact on energy transition is less. Certainly, they're less linked than they used to be. Previously, the lower the price of oil, the lower the focus, or the less the focus on energy transition. And I don't think that's the case anymore. There's a lot of focus, especially from a European level, and that's important to have from a governmental level or an EU-wide level. A focus on such energies independent of oil, to be honest with you. So the other thing then is the once in a lifetime event, which is essentially a shock, like a famine or a war or whatnot. It changes people's perceptions and speeds up the adoption of new technologies and new ways of doing things and new practices. For example, if you told me 4 months ago that I would be doing this interview on a Tuesday at home, listening to my kids create havoc in the room next to me, I would
yeah,
have looked at you very strangely. But here I am, a fully signed up member of the Working at Home Club.
yeah.
Um, so for me, the adoption by industry so the acceptance by individuals, I guess, and the adoption by industry, especially of technology that can help their industries, for me has you know fast forwarded times 5-10 times than it was. So basically that has moved the needle 5-10 years in the space of 3-4 months, which is quite an impressive shock, I have to say. So the other thing about the COVID is that it's a temporary event, and I think that needs to be stated. We're going to get through this, and it will go away. We will overcome it, and indeed, we will return to normal, or this new normal, whatever that will be. And life will go on a little bit differently per se, but will there be more opportunities out there? I think it's a question of different opportunities. Let me
Mm,
take an example, maybe not linked to COVID, but certainly to Brexit. So any asset in the UK is cheap. I mean, if you're an investor in euro, I mean, any asset in the UK just dropped by 25, 30% because of the drop in the pound versus the euro. So, I mean, the Brexit and the UK, it's not going to float off into the North Sea. It's going to recalibrate. It's going to find its feet, and it'll float again eventually. It's not just going to disappear. So I would use the same sort of analogy with COVID. Okay, there's going to be some winners and losers for sure, but indeed the world will right itself, and we will get back to business.
Mm.
That's sort of my take on it.
Mm. And so what do you think, what are the companies, especially in this energy transition, startups specifically, that we all look as investors to invest? Do you think that's going to have a negative effect, or do you think there could be even a positive effect out of it with bigger, better adoption? Maybe the ones that got funded before should have not been funded because of the surplus of the cash in the industry.
Yeah, I like that one,
Hard
to
to
be honest.
hard to generalize that, to be honest, I guess. But
So I think so. Without meaning to generalize, let me generalize. Firstly, there's going to be winners and losers, but maybe I go back a little bit to upsets in the past. I think if you go back to the Black Death that hit Europe, I think in the 1400s. If you look at what happened in Italy after that, you had the rise of the Medicis, and you had 2 centuries of flourishing creativity with Michelangelo, Donatello,
mm,
Leonardo, everybody. I think I've just named the Teenage Mutant Ninja Turtles there, but my apologies. But the point stands that you had an amazing creative boost. If you take and creative and economic boost. If you take the same after the Spanish death, the Spanish influenza, Spanish flu, 1819, it was followed by the Roaring Twenties. Again, a great decade of innovation and creativity. After the coronavirus, are we going to see the same? Maybe I just use an example of after the 2008 financial crash. The companies today that are household names, I mean, is it Airbnb? You had Stripe, blah blah blah. I mean, the list goes on. That were founded in and around 2009, 10, 11 is incredible. Is now the time to have the equivalent companies in the clean tech space founded and indeed to grow. Who knows? But fingers crossed. But you have to remember that it's a change of perception in people's mind. Previously, what was centrist and mainstream, and what was your outer case, shifts. So what was extreme becomes normal, and what was previously normal becomes something else. Becomes just off the chart. So for me, the shift in people's mind in that sense of perception has happened or is occurring, and is quite impressive. And that creates a lot of opportunities for different companies. I would say maybe one to your topic about funding. My understanding of the situation is that there was, we were in a bull market for maybe 12 years. People were chasing returns and taking on more and more and more risk without necessarily realizing it, and pushing further down, going from private equity down to Series F, Series D, Series B, Series C, and then all down the chain, the guys that were doing Series A were doing seed and pre-seed and whatnot. I think that easy money has now gone. Easy money being the availability of cash has now gone away, as guys are far more protective of their cash than they were before in terms of their allocation. Just hang on a second there. I just paused. I'm just on a call here. Can we?
And
just one second. So I have to.
Sure.
So just.
Okay, go away.
Thanks. So what was I saying there? Yeah. So the amount of cash washing around for me is less. So for me, the amount of ideas that get funded is certainly going to be less than there was before, which is essentially survival of the fittest in that regard. So I see that actually as a positive thing as an investor.
So I think we're going now to questions. Some of the questions that the audience has that's currently watching this. So one very similar question to follow up to what we just mentioned. Do you think the current developments of clean tech industry comparing to 1.0 back in 2000s are different? And are we is this growth of interest in the industry sustainable, and we're gonna avoid the potential crash, both the valuation side or even some of the technologies not materializing after all, given it takes quite some longer time than traditionally a SaaS business is to take to the market, especially if it has a hardware component to it?
So maybe I quote something that someone said to me not so long ago.
Mm.
It was about the tech crash back in, I think it was 2001.
Yeah.
They said that every idea that failed then would be a runaway success now.
Yeah.
So that's the question of timing. And what I've seen in my short career in clean tech is that the adoption of clean tech or the growth of clean tech has been slower than anybody predicted generally. So you've had solar, for example, has been adopted much quicker, but the impact of clean tech on industry has generally been, I would say, maybe slower than previously anticipated. So it's a question of timing, unfortunately, and
Mm.
hanging in there until the market is right. So you can have a great idea, great execution, but the market just isn't there, right? And that's the sad, unfortunate thing. My belief is that, and this is just it's a personal one, but for me, it's exponential, right? So you get slowly, and then buff, it should take off. Is now the time, and is now the time for the takeoff of clean tech? It's the $1 million question. I mean, I don't know, but I mean, and I was going to put a date on it there, but maybe I'll hold back from saying that. I don't think you're going to have the serious crash in valuations for guys that are in the tech, the industries or the industry verticals that are going to take off. For me, there's you might have some of the weaker companies going bust, which I don't think is any bad thing. But certainly you'll have the bigger ones and more successful ones reaping the benefits.
I'm going to phrase one of the questions. It kind of states that, Engie has an impressive portfolio and has been investing for quite some time now, and thus have a lot of experience in, again, you have quite a big portfolio already in Engie New Energies. But the question more went as follows, someone that is necessarily not innovating in the energy sector and wants to maybe tap into it with their technologies that, let's say, are transferable. So you mentioned machine learning. Let's touch something like, predictive maintenance, right? You not necessarily need to have a technology that is applicable only to energy sector. How would you approach that if you have no prior background in energy sector, and if it's something that it's even worth doing?
Yeah, so it's a great question and one we get all the time. I'm going to give, maybe it's generic, but a generic answer, but for me, I think it's the right one. If you can have a very clear, elaborate value proposition that tells me what problem you're solving for me, and if you can elaborate that clearly in about 90 seconds, for me, you're a winner. It doesn't matter what industry you're coming from. You're talking to me, a non-industry expert in technology and machine learning, whatever it is. And if you can say, I can solve this problem for you, and you can clearly elaborate on what that problem is and how you solve it, I just think that you're onto a winner right there. So this is really a communication issue. If you have if you're very passionate about what you do and you're PhD in X, Y, and Z, you can sometimes get lost in the detail, and I can definitely get lost in the detail. And that's where I think that if you have a very simple, clear message, that just stands to every entrepreneur.
Okay, great answer. And I ask these two questions always, all the people that we interview as part of Let's Talk Energy session. And I think these are the two most important ones for the entrepreneurs that are watching. So Nigel, how does an entrepreneur find you? What's the best way to reach you? And in general, what's the best way to reach Engie New Ventures?
So, firstly, just Google Engie New Ventures. It'll come up, and you'll see all our contact details online. So you can submit a query to our mailbox. You can reach out to us on LinkedIn. You can meet us at any of the fairs that we used to attend to, but now we're unable to. So we attend virtual fairs instead. And certainly, and then obviously, then you can always reach out directly to me. So you have LinkedIn, you have Twitter, you have personal email, you have generic email, and you have via our website. So there may be the easiest ways to get in touch with us.
Some people question sometimes, including myself, does outbound actually work or inbound for you? in that instance.
Yeah.
How do you scout most of the companies? Is it really that you guys, someone gets approached to you? Do you get approached through some mutual contact that, or mutual VC that you, again, gives a credibility to entrepreneur, and or I don't know, or maybe you do outreach yourselves if you see a very interesting technology specifically in the space?
So we scout in different ways. We scout a number of different ways. So there's the what we call the top down and bottom up.
Bottom up,
So
yeah.
top down is there where we have an innovation area, and we'll go out and we know what we're looking for, and we'll go and scout these companies, and we'll make it our mission. If your company comes up in our scout, we'll get in touch with you. Have no fear of that. The other one then is the bottom up. So we're at an event or a fair, and we see a startup. We go and approach them, or indeed they know who we are and they approach us. It's very key that when you approach us, that the communication aspect, your value prop, is very clear and very simple, because I might not have a clue what you're talking about. So you have to make it somewhat memorable, not memorable, but easy for me to understand. The next part then, and the number one way, the gold standard, is the soft introduction from an existing investor, someone that we know, someone that we worked with, for example, and that's just wonderful. So a couple of the interviews that you've had on already. So we've worked with many of those different venture capital investors. If they ring us up, we always take the call. We always listen to them. We always take a look at the company, because there's a lot of credibility there. So, and then of course there's the companies that we're already working with, ones that we have pilots with, et cetera, et cetera. And for whatever reason, the strategic rationale is, okay, let's invest in this company because of X, Y, and Z to align the interests, et cetera, et cetera. So maybe to sum up, you have the events that we go to. You have the soft introduction through an existing investor. You have the inbound. I got one just this morning, actually. And maybe several on LinkedIn yesterday. Inbound, and you do your job. You scout and you take a look. What I will say is that sometimes the inbound, just because it's a bit scattergun, you can often get stuff that's just not what you're looking for. So there can be a very low hit rate. But overall, there's a low hit rate in general in venture. For every 100 companies scouted, if you invest in one, that's about the statistic, really. So, we look at 500, 600, 700 a year, and we might do the 5, 6, 7 investments.
I think the reason why we ended up doing this was initially we had like the conference that we just kind of spun off of an internal event that was mostly joined by our portfolio and our LPs. But we decided that, for the same reason, sometimes when people do outbound, they don't really even care to Google and look at what the company focuses or fund focuses. So I think this chat, I hope for a lot of the folks out there, gonna help to better address and do that in outbound. Because the reality is, if you're sending something that is completely irrelevant, just wasting everyone's time, including yourself. So I hope that people are going to be more diligent before they press the button and approach. And kind of, I think timing we mentioned multiple times for this conversation with you, Nigel. And when is the best timing from the entrepreneur's perspective to approach you? You mentioned where you focused, stage wise, but do you like to have relationships before, like, as you mentioned, you like to have pilots and validation before? If I was to build a great company at the seed level, should I approach you now, or should I approach you when I raise my Series A?
Yeah, so this is the relationship aspect, the relationship point, which is probably one of the most important and also the most difficult. So firstly, the best time to raise money is when you're not raising money, just to be clear, because you're having a neutral conversation with me rather than trying to fundraise. So if you're a seed company and you're going to have a Series A in 2 years, for example, definitely touch base with me. Put yourself on my radar. Say, look, I'm doing this. Keep me up to date every quarter, every 6 months. I'm doing this, etc. Because it's very easy for me to put you in touch with someone in my industry. One of the most difficult things about a conglomerate or about a big industrial like Engie is that who do you talk to? And it can just be the keys to the kingdom. It can be the most precious thing. If you have an insider that's able to guide you to bet, you're really that's your first box ticked. So if you're a CEO and you're Series A or you're seed or whatever, get in touch with me as soon as possible. Put me on your radar, but communicate clearly what it is you
Mm,
do, and don't fluff it out with fancy PowerPoint and whatnot. You should be able to elaborate your value prop to a large customer clearly and succinctly. And that's probably the best advice that I would give to anybody that wants to get in touch.
perfect. And sort of my final question, I think, very broad one. Comparing always, when you look at venture, you compare yourselves to Silicon Valley, the magic word. What do you think Europe needs specifically in the energy sector or e-mobility sector to be maybe not even competitive, but maybe completely, at full speed number one ecosystem, whether that's Paris, London, or any other bigger ecosystem in Europe? So basically, what do we need to have more successful companies, and especially in the energy space?
So to be honest with you, I'm relatively bullish on the innovation prospects of Europe. I mean, the centers that you mentioned there, for me, anytime I go there, I find plenty of fish in the sea. To be brutally honest with you,
Mm,
so I'm very positive about Europe, the way it's approaching its early stage innovation. So that's pre-seed, seed, series A, B, C, and D. I would say that one of the issues Europe has, and that's just a structural issue, is that it just doesn't have the size of market that the
mm,
UK has, because the UK is different to Ireland, and Ireland is different to France, France different to Germany, and so on and so forth. And that's just the way it is. So you don't have this uniformity of regulation of customer of taste across a large, 360 odd million people, which is a pity. But from a financing perspective, so for me, my view is that early stage, the Europeans are no less innovative than Silicon Valley. What Silicon Valley has, in my opinion, is it has the infrastructure, and that's essentially the financial infrastructure to make innovation happen. And what I mean by that is that when you grow a little bit as a startup in Europe, and you become a growth company, we'll put it that way. So, and essentially you become too expensive for the VCs. Where do you get your financing? So you're in this
mm.
awkward little equity gap where you're too big for the VCs for the tickets they can write, and you're too small for the larger PE funds. So you're in a bit of a dip.
Or some of the PE
You get
funds don't understand it because they still look at traditional industries. I think
exactly.
generally Americans were very much more aggressive and opportunistic when it comes to even hedge funds participating in venture rounds in some instances.
So you've picked it up exactly. So I think there's a bit of a gap there. And if they want to raise cash, they go across to the US and they relocate to Delaware, which I think is a pity. So you have a brain drain of creative entrepreneurs and companies across the pond, which I think is a pity. So for me, I don't see it. I don't see that we're any less innovative and whatnot, but I see that structurally sometimes we the gap between venture and a large scale P company or P type company that's suitable for P investor, and financing for that is missing somewhat. Um,
Mm.
yeah, that's
Yeah,
that's my
absolutely. So
take
I
on that
think
one.
I think I think that will be solved to some extent. COVID is helping that to fill that gap. I think there's more money than ever coming this way, especially in the renewables and generally energy space with this new Green Deal in Europe. So quite optimistic again. Would definitely
But
agree with you.
there you go. There's an example of the coronavirus actually proving to be an accelerator for different things. There is a
Mm,
specific pot of cash for the new Green Deal. I mean, well done. I mean, Europe
yeah.
for recognizing this.
I hope it doesn't just stuck with the good intention, but it goes to being executed and fully closed and and then fully goes in force. I think
Fingers crossed.
that's sometimes when it happens in Europe, having too many parties around one table. But I think we're running out of time, Nigel. It's been great to have you. It's been great having a chat with you about these topics. I'm hoping that entrepreneurs will rush and not overflood your inbox with the intros and their technologies. And I'm we're gonna be able to see ourselves face to face pretty soon.
If I can, just on that. So, firstly, thank you very much for having me. I would say that we have a scouting gap in Central and Eastern Europe. So more than welcome to hear from entrepreneurs and startups in this region. We'd very much like to hear from them. So
Absolutely. Great. I'm sure they will have to reach out one way or the other because I think Engie is one of the biggest players in the space and definitely, as we learned today, quite engaged and very have a broad range of things to offer to entrepreneurs. So amazing to have you here, Nigel. Again, thanks a lot for your time. Really
pleasure. Thank you
appreciate
very
it,
much.
and we'll see each other soon, I guess, as I said,
Hope
in
so.
person. Thanks a lot.
Take care. Bye now.
Thanks everyone for watching. Tune back in tomorrow for another session. We're gonna have first session of Let's Talk Mobility with Michael from Neve, one of our co-investors in one of our companies. And then the next day we're gonna have a talk with Tove from Norskin Foundation, which is a new VC fund, 100 million focused on sustainability. Thanks a lot for tuning in and see you tomorrow.